Welcome to a special episode of the Capital Gains Tax Solutions and Expert CRE Secrets podcast. I'm your host, Brett Swartz. In each episode, we are bringing on some of the best real estate minds, business minds, financial minds in the world, where they discuss deal stories, inspiration. So together we can create and preserve more wealth. And it's a special edition because sometimes our guests, they cross over on both sides of our podcast. When we have folks who are specializing in an area that is commercial real estate, which is a part of this is one of our podcasts, and the other podcast, which is Capital Gains Tax Deferral. Sometimes they go hand in hand. As well, it's a special announcement here with Mr. Reed Goossens and Wildhorn Capital Gains Tax Solutions is aligning strategically to be able to offer our Deferred Sales Trust clients passive multifamily value add deals. And especially in a great place like Texas is where Reed specializes in some other areas as well. So please welcome to the show with me, Reed Goossens. Hey, Reed, how you doing?
G'day, mate. Thanks for having me back on the show, or the new show, I should say. So great look. Love the new look.
Thank you. I appreciate that. And for our listeners who don't, who are getting to know you for the first time, would you give us a little bit about your story and your current focus?
Sure. Yeah. Look, 30-second elevator pitch. Clearly, I'm not from this country. Moved out here in 2012 to chase a girl and to sort of chase a dream to sort of live as an expat in New York City. And that was really it. And fast forward a couple of years, I started realizing the benefits of investing here in the United States compared to where I'm from in Australia. The barriers to entry into secondary and tertiary markets, which we'll talk about here in a little bit, were a lot more attractive than where I came from in Australia, which think of like the LA, San Francisco, New York market, high appreciation, low cash flow. And just the plentiful opportunities to buy multifamily, which also doesn't exist in Australia. So having this lens of being an international person coming to the United States and realizing of opportunities that exist here, I started my business with my business partner Andrew Campbell at Wildhorn Capital, and we have grown that last 5 or 6 years, and we have about 2,500 units in the portfolio right now, about $350 million assets under management, and we've grown it through real estate syndication, which I'm sure we're going to talk about here as well. And my sort of whole shtick is, if I can travel halfway across the world and make it happen. I had limited funds when I moved here. I had no network. Then the average American can do the same thing as well. It's just, it's truly the land of opportunity, and you just got to realize what's in your backyard and go take it with two hands and go for a run.
I absolutely love it. And I want to dive into that here in a minute, more on the strategy. Before we go there, though, I want to take our listeners on a little bit of a journey with you, right? As a part of that transition and that perseverance, right? That it's kind of, I think of like the Wild Wild West back when those who kind of forged this new path for America, right? They started out basically on the east and they moved all the way to California. I'm in California, right? Mm-hmm. And you're coming from Australia and you're forging this new journey into this new country to build this huge real estate empire, really, what you've built with your partner and helping so many people along the way. So what was it that really was the heart of Reed making that journey to America?
Two things. It was I backpacked through America back in 2009, so I sort of had already fallen in love with the Big Apple. I knew that at some point I wanted to live there as an expat, and again, my background's in structural engineering, so I really just thought being in the big city, there's obviously a lot of jobs there that I could go get. Secondly, was also my girlfriend, who is now my wife. She was also American, and we moved. I moved out here to be with her, but also to live in the Big Apple, and that was really it. It was just an itch, something that I always fear that regret, right? I'd hate to wake up when I'm 70 years of age and go, geez, I wish I'd moved to New York City back in 2012. So that was really all it was. And prior to moving out to the United States, I'd already been bitten by the real estate bug. I'd sort of read the book Rich Dad Poor Dad, and that was sort of opened my eyes to the world of being an investor and the word entrepreneur, because I didn't even know what the word entrepreneur meant. But it was more challenging myself to go out and create a new life for myself. And through creating a new life, you create a new story. And that was really all it was. And then from there, it's just following the cookie crumbs down the path. Obviously been a lot of ups and downs along the way, but really pushing those boundaries and just saying, look, I want to go challenge myself to move halfway across the world, see if it works. The worst case scenario is I move back to Australia and get another engineering job. And here we are nearly 10 years later, and that didn't happen. Thank God.
Beautiful. Yeah, excellent. And so, by the way, you can learn more about Reed Goossens at wildhorncap.com. And so then you made a switch into investment real estate, into syndication, and mostly multifamily value add. And you're in the great state of Texas right now, and in fact the Austin kind of really in the micro location, because Texas is a big state.
Mm-hmm.
And we're seeing just this flood of influx of capital, businesses, and people moving to places like Austin. In fact, I think it's maybe in the last 150 days, we've seen Tesla announce, we've seen HP, I think Intel, all relocating, a big portion, or if not all, of their their headquarters to Austin in particular, right? Not just Houston or Dallas, but Austin, Texas. So would you just focus like a laser right now on your niche focus in the Austin market,
Yep.
as well as what kind of separates you and your team as far as a commercial real estate syndicator, given your experience now?
So if we take a step back, I think you got to look at where the story of Austin and how it's evolved over the last 30, 40, 50 years. And that has been that it has really, but prior to the early 2000s, it was probably a really boom and bust type of town, like a very typical Texas town. And it was through those lessons that they learned, coupled with the fact that Austin, everyone knows Austin's more liberal leaning than the surrounding red that it lives in. And it was sort of that keep Austin weird mentality, combined with true investments into attracting businesses into a city with good infrastructure, with the good tax benefits for the businesses, but having that liberal mindset for the young employees that they can handle, or that bohemian mindset that they can handle to live in that city, and thus turning it from a boom and bust city into more of a stable city where it's now really on the map. It's truly transformed into a global city. It's got flights directly to and from Europe every single week. It is in Central Time, so you get both East Coast and West Coast, plus South and Central America from a time zone point of view. And it really has established itself as the second Silicon Valley or Silicon Prairie, and that has helped drive a lot of jobs. So back to, you made the announcements of Tesla, Oracle, some of the other big campuses that have moved there. Google has moved there, Facebook's moving there. It's all through that they've got the tax benefits for having a business in Texas, but it also, for their employees, they can have that lifestyle as if they experienced in typically liberal cities like San Francisco and New York, where has been a lot of tech. So that transition of a city like that over the last 20, 30 years has really made it be a great place to invest, because you are now having a lot of supply and demand issues, right? Have a lot of people who want to move there, demand, but the supply is really constrained because the city is also growing so quickly, but it's growing at a pace that they need to also be mindful of how they grow. They don't want to look at the lessons of Houston or Dallas, where it's just, open slather and anyone can just build whatever they want. They want to be mindful in how they build their town and how they build their city and how they build their infrastructure. So there is a barrier to entry for new product. So coupled with the demand, coupled with the supply constraint, buying existing value-add multifamily in a city that is growing very rapidly and has doubled its population over the last 50 years. Every 10 years over the last 50 years, it's doubled its population. It's continuing to double that and projected to double that in the next 10 to 20 years. Coupled with a city that wants to invest in itself in terms of infrastructure and attracting new businesses, it makes it all the better for investing in for our point of view, our thesis. And that is really riding the wave of what Austin has changed over 20 years. So that is our thesis. If we can buy existing value-add multifamily in a supply-constrained market like Austin, Texas, you will do just fine over the long term.
Beautiful. Very, very well said. So much to dig into that. And as also part of the show, we're talking about investing tax deferred. So I want to kind of shift to that part of the topic, and then dive in on some of the multifamily deals that you're seeing right now, and what that might look like if you're a deferred sales trust client of Capital Gains Tax Solutions. So one of the biggest challenges, and we've covered this in previous episodes, by the way, you can go back and see Reed. I think he's already been on 2. This is his 3rd time to the show, first time on Expert CRE Secrets podcast. But one of the biggest challenges for individuals who are selling a highly appreciated asset, who want to get into value add multifamily with syndicators that are in different places, right, is the fact that they have this cap gains tax in between. And so most clients, before they find us, they're struggling with selling and wanting to be in with someone like a Reed Goossens in a place like Austin, Texas, and value add multifamily, right, on a larger scale, but they can't, necessarily 1031 into it. It's complicated. It's in fact, 95% of the syndicators we work with just say, no, we don't do it.
Yep.
Unless it's a huge deal, like, a $3 to $5 million deal, then we might be able to carve it out. But most of them would say no. And this is where the Deferred Sales Trust comes in. It's a nice solution where you can sell, and now you can move the funds up to 80% can go into like a value add multifamily deal of your own or with partners. So it gives you a lot of flexibility there. And one of our goals is to find trusted value add with a long track record, folks like yourself, Reed, that we can find deals. Because right now the biggest challenge that I'm seeing is just finding the deals, right? And covering them, right? There's a lot of competition. There's a lot of capital. And so being connected with folks who already have a long track record in those cities, like where a lot of people want to be, like Austin, is super valuable. So will you just speak to first the challenge of the capital gains tax, and then second, what you're seeing as far as opportunities to buy?
Yeah. So I'll answer the first question, and we've historically said the same thing. No, we can't take on 1031 exchange money. It's got to just be direct equity because of the structuring involved from our side of it makes it a lot more complicated. Now, we've done one 1031 exchange with one big investor, but that's one person. Typically, our business has been built on 50, 60, 100 investors pulling their money together and taking down a larger asset. So when you have one of those 50 investors come to you and say, hey, I've got $2 million, you go and change the structure for the other 49 investors, it just doesn't make sense, right? And so that's historically how it's been changed. But with obviously services like yourself, and now we are being educated about services like yourselves, we can then expand the pot to be so many more people who don't want to get caught with the taxes and want to still be able to invest in value add multifamily in a central Texas location. So having the sort of cake and eating it as well. In terms of the benefits of what we're finding today, yeah, you hit the nail on the head. And I think across the country, and this has been accelerated through COVID, is the flight of from coastal cities into the inner regions. And I'm talking North Carolinas, I'm talking, Phoenix, Arizona's, I'm talking Denver, Colorado's, all that type of stuff, including Texas, Florida as well. A lot of people going to where it's more affordable. Now that's good in the short term, but over the long term, it may change. I know, for example, Austin is not as affordable as what it once was, but it's still more affordable than, say, New York or San Francisco. So we are very focused on trying to be, an inch wide and a mile deep in our select locations or our select markets, because we want to be the experts in those markets, right? And we have those relationships. We have the existing relationships because we've been proven track record in those markets. So thus, someone coming from the coast who wants to buy because they're thinking, I just want, human needs, I want to just tell my friends and family that I'm invested in Austin, they're not going to be able to compete with someone like our group because we've done multiple deals in the same locations with the same brokers who really run all the deal flow in and out of Central Texas. So right now it's about finding the right deal at the right price. But it's also being bid up by a lot of coastal players coming in, seeing the growth and thinking, I need to be a part of that as it grows for the next 10 to 15 years.
So it's a fine line, right? And that's the key, right? Having someone who's not going to be overpaying and who's going to be buying on the fundamentals, who has a long track record, has the scale to be able to do it. And then when you find that deal, be able to be a part of that. And that's why I'm excited to be connected and strategic aligned with Wildhorn Capital and Reed Goossens here. So shifting from that now, your take on just current market conditions, besides low inventory, hard to find deals. It seems like, as much as I can tell, this COVID thing is relatively speaking on the multifamily front. My clients and partners maintain high occupancies for the most part.
Mm-hmm.
Collections maybe here and there challenged, but kind of more little blips. Definitely not what we thought it could be. We were afraid it could be. Any sense on just where we're at with the fundamentals of multifamily right now?
Yeah, I think in general, the fundamentals are very strong when you compare it to any other commercial asset class. You think of retail, you think of hospitality, you think of hotels, actually getting hosed throughout COVID. Now, I do think that we'll have a big bounce back once we sort of get back to travel, get back to, us as humans, we want to interact with one another. So going to the retail strip center, going out to dinner, going to the movies, going to theaters, going to sporting events, that will come back. But it will come back in the sort of the tailwind once we get the public health under control. I can say A couple of our assets we have in close downtown urban cores of Austin have struggled more than our suburban stuff because people are saying, well, I can work from home. Why not live 20 minutes out of town? I can pay $500 less and I don't need to go into the office. And so we've seen the concessionary market in what I call the CBD, the Central Business District, in and around Austin. And this is not just Austin. This is New York, San Francisco, Denver, all these areas where they have high concentration of office space we have to offer a lot of concessions. Now, I think it's short-term pain for a long-term gain because I think people will come back to those hubs eventually. But right now, the headline news is multifamily has fared very, very well compared to other asset classes. I think will be specific areas or specific demographics that may have struggled a little bit more than others. But in general, when you compare it to the other asset classes, it's coming through with flying colors. And that in itself has propelled a lot of the interest in real estate, particularly commercial multifamily. I also think that from historically, real estate has been seen as an alternative asset from the big players in Wall Street. Now they're seeing that, no, hang on, this is a lot of value-added creation can be created through owning these types of assets. Thus, they're coming into the game in the last sort of 10 to 15 years, which is also compressing cap rates. So a lot of things have been said there, but overall, I think multifamily is going to do just fine. We are in a very compressed cap rate environment, which is driving up prices. I do think there might be some sort of swing back the other way. I don't think we're going to go all the way back to a 4, 5, 6% scenario, but I do think there'll be some sort of softening as interest rates maybe start to expand. But then there's other people on the other side of the fence that think that interest rates are going to stay the way they are, and with low interest rates means low cap rates. So don't have a crystal ball, but right now we're sitting pretty good. And as sort of Warren Buffett says, when you think you're doing well in a market, maybe you should start to take stock of what is truly going on outside of it, because it's the things that sideswipe you that can really wipe you out as an industry. And so we're constantly, as an operator, looking for those things and trying to understand the fundamentals of what's going on in our markets, in and around multifamily in general. But overall, fundamentally, multifamily is doing just fine.
Perfect. Thanks, Reed. Yeah, it's a black swan event. It's like the COVID-19s. You want to be always kind of trying to be in front of those things. That being said, I want to get real practical right now. So if you're listening to this and you're interested in investing with Reed, you can go to wildhorncap.com. Now, you got to be an accredited investor, right? And if you don't correct. Make sure you just go check that out, what an accredited investor is. But for our deferred sales trust clients, if you're listening to this, it's simply finding out when a deal comes out. And what's going to happen would be Reed would send me a deal, I'd share it, or you'd be on Reed's list and you'd say, hey, I got some deferred sales trust funds. Hey, can we reallocate? And that's as simple as it gets. And with the neat part about the deferred sales trust and how we can invest is we want to find a rate of returns, typically around 8% net of all recurring fees over a 10-year period of time. And we want to find investments to achieve that given the level of risk tolerance for each individual client. And so that's where we love some liquidity, stocks, bonds, mutual funds. We love some passive investments, right? Especially in locations perhaps that you're not located in, like California, for example. I have a lot of clients, Reed, who go, look, I'm plenty capable of doing this, but I just can't find making deals that make sense. And I'm saying, yeah, our cash on. In fact, yesterday I was speaking with a potential client who's selling about a $2.4 million apartment complex, completely free and clear, or $30,000 of debt. They bought it for about 1.2. They about doubled the price, but their rents haven't necessarily achieved that level of 2.4. So their return on equity was about 4.5%, 5%. And I'm saying, no, it's not just the cash on cash that you're receiving. What's your return on equity? And if we can sell that, take all of that equity, move it to the deferred sales trust, tax deferred, and put it into value add multifamily and other locations, guess what? And you don't have to deal with the rent control. You don't have to deal with the toilet trash and the liability. You can kind of retire. That's a great combination. Maybe even double. In this scenario, I think their cash flow is about $120,000 per year, and we're looking at around $190,000 per year.
That's great.
So they increase their cash flow, and so they're like, well, wow, you're right. And I go, well, that's something that you can do now. And so practically you sell, defer the tax, and then the next day can invest into a deal. And from Reed's perspective, to kind of close the circle, it's just a trust investing. It's like an LLC or an entity. It's not using the 1031, which is like the block push, which is very challenging. It's a whole another set of rules. It's really seamless here. So all that being said, that's the how there. Anything else to add on the how on your side, Reed, or questions that investors should be asking about how to do this if they want to invest right now?
No, I think you did hit the nail on the head, but two, also what you mentioned before about that specific deal, it's looking for value add opportunities in knowing your market. Yes, you can get a T12 and look at the current revenue, right? And that's going to back into a net operating income. That's going to back into a cap rate, and that's where you're going to get a yield on your money. But if you don't know the market truly well enough to know that I could go push those rents because they've been under market value for 10, 15 years, $100, $200, $300, well, that's only going to increase your NOI. And so looking at that in-place cap rate going in may not necessarily give you the right picture if you don't truly understand the market. And that's where coastal players or coastal investors may not have the nuance of understanding what a deal in Central Texas might be, or a deal in Denver, or a deal in Florida might be able to push it to increase that stabilized cap rate, and thus being more yield on your money. So keep that in mind when you're looking at these deals, that there's more to the picture than meets the eye. And it just by looking at the T12, because you need to understand the totality of what's going on in the market and with the deal itself, and where do those rents stack up against where the other competitors are in the market.
I'll see deals where it says, "Oh, they sold at a 4 cap," and you go, "But look at it; they were $300 below rents, right?
Right.
Market."
Right.
And so they're quickly going to be able to move up. Now I say quickly with quotations here, because in California we have rent control, right? And part of that now is statewide rent control. And essentially in Sacramento, you're looking at about only an 8%, year over year that you can actually do now. Now Sacramento before the rent control was the actual 2 years in a row was the number one market in the U.S. for year-over-year rent growth. It had been so suppressed for so many years, and so we saw some fortunes really made in this period of time. Now it's still, I think it's in the teens, in the top 15 or so market for rent growth. But on top of that, now you're capped, right, at 8% with the statewide rent control. So there's a number of nuances here that you want to understand, that if you come in, if it's a new tenant that moves out, yes, you can put a new tenant in, and we can probably increase the rents by a couple $100 given value add. But if it's an existing tenant base and they're not moving out, right, you can only do so much. So all of those things are a part of why you want to try to build a dream team of expert commercial real estate syndicators, operators, brokers, and then, tax deferral as well. We'll help you with the Deferred Sales Trust. That being said, if you want to learn more about the Deferred Sales Trust, you can go to capitalgainstaxsolutions.com. And with that, are you ready for the lightning round, Reed?
Let's do it.
All right. So knowing what you know now, Reed, if you could go back to your, let's call it your, how old are you now, Reed?
34.
Let's go back to your 31-year-old self just a few years ago. What's the one thing that you might do a little different?
I think the number one thing I probably did back when I was doing deals then was I fixed interest rates. And that fixing with Freddie and Fannie has caused me to have really big prepays. It's a step down prepay, but I could have sold some of those deals within the 5-year timeframe hold that we projected sooner, but I haven't been able to get out of those deals because of the prepaid. So just knowing where interest rates were going to, in that back then, everyone thought interest rates were going to the moon, and we capped it. And by buying that cap, also then hamstrung our exit options in earlier than our defined exit date. So that's probably
what's called yield maintenance, right? Or a prepayment
correct
penalty. And these yield maintenance is basically, they say, as interest rates go lower, basically to get out, the prepay goes higher, and it makes
correct.
So big, and it's the hedge for the lender against making sure they're locking in on their end what Reed's going to be paying them back at.
Yep.
But if they go lower, that means Reed's payout goes bigger. That means essentially it locks you in, and you just don't sell it because it's like, it doesn't make sense. I'm just going to give out so many capital. You got to let the time wear out. Now, as the time wears out, those yield maintenance expire. Now you can do it. So what Reed's saying is he wouldn't have locked in. Is that a fair summary, Reed?
That's a fair summary. And again, people say, well, why did you do that? It was where we were in the market. You're reacting to what you can see, and no one has a crystal ball. So
yep. Great. Second question. Number one book you're reading or recommending right now?
Oh, I'm reading Silence is the Key by Ryan Holiday. Really good book. Ryan's actually an investor in one of our deals, local Texan guy. And he's got a bunch. Ego is the Enemy. He's got another one, all on the Wall Street, top Wall Street Journal bestsellers. So check it out.
Excellent. What are you curious about right now?
I'm curious about creating ecosystems within the business. So not just buying multifamily, but how can I go and really control as much of the pieces of the puzzle to really drive that value. And I'm talking about construction management. I'm talking about controlling the contracts. I'm talking about property management, everything that feeds into multifamily, and how do I make it more efficient? Because when the more efficiency comes more profit for not only myself, but also for my investors and for the deal. So really intrigued by the creating of the business ecosystem, because I truly believe that you need more than just one revenue source, right, in your business. And with multifamily, there's so many different revenue sources besides the rent that you can profit from as an operator. So really controlling that piece right now is really scratching my curiosity.
Excellent. Yeah, becoming more vertically integrated versus
Correct.
horizontal.
Yep, exactly. Exactly
right. And by the way, a plug for EXP Commercial. I just recently hung my broker's license on EXP Commercial for that exact reason.
Nice.
Because what they do is they offer multiple income streams versus just selling brokerage and becoming a stock owner. Their stock now hit, I think, $150 a share yesterday from literally $10 about a year and a half ago. And Grant Cardone just signed on as well. And so it's kind of big names that are jumping on. That being said, last question is this. So Reed, after all your success and after all of the things that you're working on, what's the number one way that you stay focused on your goals and stay focused on your values?
I think it's trying to be grounded as much as possible. That comes through doing daily mindfulness techniques, daily breathing, focusing on the breath, doing exercise every day, and just really getting into a routine and not being distracted by the mobile phone, by the notifications, by the email, but taking time in the morning to ground yourself before you go and tackle the day. And if I can focus on that each and every day, the rest will sort itself out. So that's really what I'm doing.
Beautiful. Well, Reed, I want to thank you for being on the show and sharing a bit about your story and aligning strategically with us to be able to offer some value-added multifamily deals in the greater Texas area. So that being said, if we remind our listeners where they could find you if they want to reach out to you.
Wildhorncap.com is the business website. If you want more the personal website, go to reedgoossens.com. There's a bunch of books up there, podcasts, all the good stuff. You can reach out to me. And if you're ever coming through Los Angeles and you want to hit me up at info at reedgoossens.com. We'll definitely meet up for a drink or a coffee and we'll talk some shop.
Beautiful. And for those who want to learn more about the Deferred Sales Trust, you can go to capitalgainstaxsolutions.com. And you want to learn more about expert CR secrets, you can go to expertcresecrets.com. We appreciate you listening to the show, and thanks everyone.